Hey, welcome traders to This Week in Options for the week of March 3rd, 2025. Rough week last week with the tariffs coming into play this week. It's going to be interesting what happens Monday. However, if you took a hit last week and you're in technology stocks, you're probably like most people if you're heavily weighted in that. But hey, no fear. We're going to talk about it today and how we can manage our positions so that we profit from the down move and last and really take advantage and grow with the coming year and the months ahead. So be sure and hit the like and subscribe buttons down below. Download the free option workshop in the link below. It talks about the main benefits of trading options over buying stocks. All right, guys. So last week was a big down week. We ended up at 59.54 in the SPX, the S&P 500. Down from 6,013, so quite a ways down. Let's see, for the 5 days, it was down about 1% overall in the S&P 500, and year to date, we're still up a little over 1%, 1.25%. So kind of flat so far this year. However, if you look last week, look at technology, down 4%. So if you're heavily in tech, which is the big growth area, then you probably got hit pretty hard last week. I did, but I'm not worried about it because I'm thinking long term throughout this year, and I think that's the best sector with the AI move going forward. But again, we don't want to all be in tech, so just a lesson, and we don't want to be all invested in the market either. So, and again, this is my trading account, so this is not everything in my portfolio. You want to keep, at least I recommend keeping a separate for your 401k, your retirement, and then just having a trading account. But look at where we are now on the fear and greed index. We're at 20, extreme fear. So this is the time now we move more money into the market, and I'm moving more into tech, and I'm rolling out and allowing time. So we'll talk about that on the live trades in this video. As far as the economic reports that have come out and are coming out. So this week, let's see what we've got. We've got Thursday, we've got the jobless claims coming out, 243,000. Now, keep in mind, a lot of the job cuts right now are actually coming from the government. So they're not in the retail sector. They're government jobs, and that's going to make us more efficient in the long term. At least that's the plan. And Friday, we've got the jobs report, and then Powell speaks later in the day, but not too much next week. And last week, we had GDP come out at 2.3%, and we had PCE came in, 2.5%, core PCE 2.6%, so kind of as expected. And the interest rates coming, the cuts were expected. It looks like now, come May. Let's look when they've got the first rate cut down to 4 to 4.25. I think it's still projected as June, and then they're probably pricing in more cuts throughout the year. Actually, they're saying now September. Wow, another one in September. So with the new data last week and the tariffs going into place, they're seeing that the growth numbers are moving down, and there may be cuts sooner. So that's something that Powell can control in the short term. So let's go ahead and jump into the trades that we've got on the platform. By the way, if you'd like a free copy of the Options Strategies Trading Guide, comment Options Guide down below. And the first one is Apple. And this is the beauty of options and what we can do. I've rolled out now to April. I was in March, but I'm now in April and kind of readjusted my positions. But in Apple, we're looking good. It's held up pretty well through the downturn last week. It was one of them that really held up. And if we look at the chart, we're right now down at the 200-day moving average. I've got the yellow is the 200-day, the red is the 50-day, and the green is the 13-day. And RSI is right in the middle. But my target is 170, and that's what I look at. I'm on the wrong stock. We're in Apple. Here we go. 241. Okay. Well, we had headed down, but my target's 260. We're at 241. We're in the profit zone if you look on the curve mode. This is the Tasty Trade platform. You can use it down below. And you can actually see that just popped up. But you can see in the last 30 days, we made $269. So we haven't lost in Apple. It's held up well. We're still in the profit zone. My target's still higher. I think Apple is super solid fundamentally. Huge amount of cash, great positions. So doing well in Apple. Let's move on. The next one is Airbnb. They've done really well as well. We lost some money last week, but we're still up $382 in the last 30 days. So not too bad. And Airbnb, we had a big pullback, but we're now down at the 200-day moving average. So I like Airbnb long going forward. They beat on the top and bottom line on earnings on February 11th, and they've got a huge amount of free cash flow. $4.2 billion, something like that. So their fundamentals are extremely strong. So I'm long Airbnb, and we're in April again. So I just rolled my positions. When I get tested and there's a market pullback and a lot of volatility, once I'm at 15 to 21 days to expiration on my put spreads or short options, I'll roll them out to the next month. So I like to trade between 30 and 45 days. So once I get to 15 to 20, that's when the volatility really starts to come into play, and the options, the time decay really goes fast. So I like to roll out and just collect more premium. AI is another one. This one did have a pullback to 23 last week, way down below. My target's much higher, 50. So I think this is a screaming buy right now. Everybody's panicking getting out, but this is when you dollar cost average and you go in deeper. I mean, I might consider throwing another put spread on, but I've got 2 deep in the money calls, leaps options already. So I'm good with my 3 positions, and then I've got a put spread, and I rolled that out to April. So they just bought more time, and I did that, and didn't take a big hit for doing that at all. And that's kind of what we do. But now, we need to move up in the market going forward. And Applied Materials, these guys are huge in the semi equipment manufacturing. They took a hit as well. They're below now, but I moved out to April. So I do need to move up now. Here's where we are. I just need to move up to 165, a little bit of a boost. Any good news in the market next week? There could be more bad news, but that's okay because I'll wait it out. I'm still in April on my put spreads on Applied Materials. AMD, let's see. On AMD, same situation. It got hit last week down to 99. My target's much higher. I've got put spreads and leaps on, but I rolled out to April. So we're still in the middle of my put spread range and doing okay. And we've been doing well in AMD year to date. Amazon, it's a behemoth. So I mean, now's the time to go long. My it's 211 right now. My target I think is 250. Yeah, 250 target. I put my target up here, and we're just we've got a strong support here at the 200-day moving average. So long Amazon, we just need to move up. We're just a little bit below the profit zone, and here we're out 2 years in APLD. So am I worried about the big drop in the market last week with APLD? No, I believe in the stock long term. My target's much higher. I don't think I have it on because it's a fairly new trade. But this is Applied Digital Corp. They're a cloud services company for high performance computing. So I'm not worried about it long term at all. Avago, Broadcom. This one actually has done pretty well. I mean, I think it went down last week, but just look over the last 6 months, we're still up, over $1,000. So we've done well in Avago. Profit zone, we're down below it. Now we need it to move up, but we're in April, so I don't have to worry about it right now. Anything in the next 2 weeks can pump it right back up to in the profit zone going forward. And if it doesn't, then once we get to 15 to 20 days to expiration, then I'll just roll out from April to May. CEG, Constellations Energy Corp. So you can see I've got a lot of tech in my trading portfolio. And again, I'm not too worried about it because I've moved out to April right now. So I bought some time and collected more premium as I did it. We're down at 250, so we're below the profit zone. So kind of the same thing for most of these stocks. Coins, same situation, really got hit. 215 right now, and we've got 220, 200, and 270, 260 put credit spreads. So we do need to move up in coin going forward. Same thing with CRM, but we're out in April, 320 through 300. We're at 297 right now. And, all these charts kind of look the same. We just need a little bit of a move up and we're in the profit zone. So the money that we lost last week is just delayed a little bit to come in. So with Dell, we are at 102 right now. So we are, I've got 2 leaps options on in Dell. And if we look at the chart, we're way down here. We're below the 200-day. My target is 150, so I'm not worried about it at all. We've actually, in Dell, I think still done pretty well over the last 30 days. Yeah, $525 over the last 30 days. So even with the down move, we're doing okay in Dell. I like Dell long term. Any big up move, I will throw on short calls against my leaps. FedEx, we've got 240, 230, and 260, 250 put credit spreads. We're actually in the green. You can see I rolled out my 260 because we were being tested last week. So I rolled that to April. I left my March on because it's not tested yet. So I'm letting it ride a little bit further. And you can see we're still in the profit zone. If I get tested down to 240, and we've got a long way to go there, you can see I've got an 86% POP, probability of profit, on this one. So this one's likely to be profitable unless there's a huge move down. But again, I'm not worried about it because look at my target, 310. It's huge. It's way up there for FedEx, and it's already been hit. Okay, Google is the next one, and we are trading at 170. So we are in the money. We're at 185, 175 on my put credit spread. So need to move up. But again, same situation. I've got a target much higher for Google out, in the next few months. They had a beat on earnings on the 4th of February recently, but the cloud revenue grew by 30%. So less than the expected 35%. Ooh, terrible news. Wow. But my target, again, is 215 for Google. I'm not worried about it long term. HD, 370, 360. We've been profitable in HD, Home Depot. Over the last 60 days, we've done $387. So we're up in Home Depot, and we're in the profit zone right now and looking good. Let's see where we are on the chart. Yeah, we're down here. My target, I've got to put in my target for Home Depot. I think it's around 430, so it's up here around the top range. But I like Home Depot right here. There's going to be interest rates being lowered, as we talked about, a little bit sooner. That's probably going to help with home sales and renovations and such. Hood is another one. They came out with earnings and crushed it, and that's actually when I got in. They've got 94% gross margins. It's unbelievable. My target's 70. So even though we had a pullback, we're at the money. We're doing okay in Hood, but I actually like it right here. Long term. IonQ, high performance computing stock. It's had a pullback with all the other AI stocks. No problem. I just rolled out to April. L3, I like defense. Actually, defense held up pretty well last week. We're at 206. I rolled out to April, the one that was in the money. I left in March. I'm still there with 19 days left, my 195, 185. So we're still looking okay in L3 right now. And I think it's pretty much the same with Lockheed Martin as well. Let's jump to that. But we're at 435, and is our short put. And 450 is where we are. I've got a $600 target for Lockheed Martin. So I'm not sure if we're profitable or not right now because it did have a big hit. Yeah, we're still down. We still got some money to make up in Lockheed Martin, but we're in the profit zone right now. And you can see we've got $320 in extrinsic right here to make up as long as it stays above that 435 in the next 19 days. So then we'll be around break even. And from here, I see it moving up. I mean, there's going to be more defense spending. Lilly, I think we've been killing it in Lilly. Just over the last 30 days, I know we've been profitable. $588 in the last 30 days, just trading put credit spreads. And then it looks like I did throw on at 1020 a short call spread against it. So it had to move up, and that's where I threw on my short call spread. You can see we're in the profit zone. This is what I love about the Tasty Trade platform is the curve mode. You can use the link down below, and there's some benefits if you join through my link. But my target's 980, so I've got a call spread up above that on the move up. So that's where I sell both sides. Lam Research, big semi-manufacturing company, 85, pull back to 76. I'm not worried about Lam long term. My target's much higher. See, 110. So I always want to keep that in mind. And then I want to roll out my put credit spreads once they get in the money at 15 to 20 days. And my leaps, they're so far out, like 565 days. I'm not worried about them anyway. Even though they take a hit now, they'll come back within that time frame. So Mara is right here. And again, my target for Mara, it's way down. So I'm just sticking long. I'm not panicking or getting out of the market at this time due to that fear and greed index being so low right now. This is, when people run, and this is when you want to buy and be in the market. Add to your positions even 668 is the current price of Meta. We're at 640, so we're in the profit zone right now on Meta. So we're looking good. You can see that. And then Marvell, AI stock, great long term. I'm not worried about it, but they did have a pullback. But we're actually still in the profit zone on Marvell and looking pretty good. We're in the green. So we're doing well in Marvell. Target's much higher. Microsoft, Bellwether, we've got a 400 put credit spread. We're probably right at the break even. Yep. Right at the break even right now, but we just need to move up, and it's had a big move down. So I'm not worried about Microsoft long term. MicroStrategies, now this took a hit. I'm not worried about them either. Their target's much higher, but it's I rolled out to April in MicroStrategies to collect more premium. So we're right at the break even. So you can see, even though we had a huge 4% drop in the NASDAQ, the technology last week, I'm all in technology on my trading, and I'm going to stay in it. I'm not going to panic and get out of the market. So 185 put credit spread, and then we've got leaps in Micron. Micron is one of my favorite right now. It's at 93, and my target's almost double where it is now. So not worried about it. All right. ServiceNow. It had a pullback, one of my favorite. I've been out of it, so I threw on I threw on an Iron Condor, and I like it. 1020 is the upper, 895. So right here, and then all the way up to here. We've got a huge range that we just needed to stay within. And am I in March or April? I'm still in March, and there's no earnings coming up until April, 423. So we can even roll these out to April. But look at this, $568 left in premium to collect if it stays in that range. So they're such a good company that I think they will. NVIDIA, they take a big hit. I'm long NVIDIA. I've got two call spreads. I'm not worried about them at all long term. 140, 135. I just rolled out to April. Palantir, same thing. Not worried at all about the pullback. I bought more. I've got a leaps option, and then I've rolled out to April and my 95.85, and then I threw on a March 80.70 put credit spread. So yeah, there may be if there's a further pullback this next week, I'll just roll this March out to April. So I'm not worried about them at all. They're going to continue to go up. It's just a slight correction, and I'm confident they're going to move up. But let me know in your comments below if you think it's going to get hit more next week. It could. And again, I'm thinking long term. PayPal, great buy at this at 70 as well. Same situation. The queues, good time to go into the queues if you're not in the queues with the full pull back of 4%. Last week, I threw on a 490, 480 put credit spread in March to take advantage of the short term volatility. And then if I get tested, I'll just roll out to April with my other put spread. Rigetti, high performance computing, 8. I've just got 3 leaps options on. I'm long there. Raytheon, defense stock, 130. They did pretty good. We're at 132, so we're in the profit range still on Raytheon. And the next one is SMCI. And I'm sure that they probably got hit. Let's see. We're at 41. Yeah, I'm at 55, 45. So kind of got hurt there. But I'm not worried about SMCI long term. Target's much higher. Huge AI play. SoFi, same situation. I just pick up more leaps anytime, below 15. I think SoFi is one of the best buys right now. Leaps options is how I play that because it's a low price stock. And Sound, another one, 2 leaps, 1081, got hit last week. Or actually, no, it took a big 17% up on Sound last week. You know what? Let's go back to SoFi though, real quick. Just to look, even with the hit last week in SoFi, over the last 6 months, and we lost money last week, but we're still up almost $4,000 in the last 6 months. So SoFi, I buy on the dips and then sell if there's a big move up. Sound, and actually out of all these, let me know in the comments below what your favorite play is. Sound, I'm just leaps long now. I had calls that I sold against it, but sold those on the down move, so I'm long. I'm looking to put on Tempest AI. They're an AI play. They've been hit, and they're at 56, but they actually held up fairly well. My target's 80, but they're developing virus vaccines for viruses using AI, and I think long term they sound like a great company, and I've got to do a video on those guys, but I'm throwing back on something. I know I recently made money and then got out on the big move up. So in the last 30 days, we made $600. Tesla's next, and it's had a big pullback down to 293. I really like Tesla long here. So my target for Tesla is 450. They're not just an EV car manufacturer. They've got the humanoids. They've got robotaxi. One of my favorite plays right now. So I'm long with a lot of put credit spreads. I use put credit spreads in Tesla because even with the leaps, they're expensive with the stock at 293. Even if you buy it for less than half the price of owning the shares outright, it's still a lot. So I like to use put credit spreads and a lot of leverage there with Tesla. And then TSM, Taiwan Semiconductor Manufacturing, for semis, 180 is the price. We're at 195, 200. So you can see I rolled out again to April, extending that, collecting more premium. Or even if I have to pay a slight debit, it's better than taking a loss for the month or just waiting and letting it play out. I want to give myself more time for the market to come back. Uber is another one of my favorite plays. Yeah, technology stock, but also in it's like the taxi service, but everybody uses Uber and Lyft now. So I like Uber. I've sold a call against my my leaps option, but we've done really well over the last 60 days. There's a network issue right now with my Tasty Trade. I'm not sure why, but it looks like everything else is working okay. But anyway, we'll come back to that. Here it is. Yeah, $1,000 in 60 days, so not bad in Uber. Must be something going on with my connection. But I like Uber long, and my target for Uber is 90. A little bit of a pullback last week, like everything. All right. We're getting to the end. Ulta rolled out to April, 360. I readjusted down as well in Ulta. but I like Ulta. Strong fundamentals. United Health. Actually, when these technologies got hit, some of these stocks held up pretty well. Yeah. United Health did. They had another issue that came on, but again, I looked at it. They got destroyed. It was Department of Justice launched a civil fraud inquiry into their operations. So I don't. They're such a behemoth and so strong, so much lobbying power that I'm not worried about them long term. So I'll just stay long with my put credit spreads. I'm not going to add to my position, but I'm going to stay long. Viasat calls held up pretty good last week, I think. Walmart 98. We're right at the money in Walmart. I rolled out to April, so I didn't roll all the way out at the early April out to 30 days because I could collect premium. So Walmart, we're still in the profit zone. Yeah, we're at 98 right now, so looking good. And then the last one is XYZ. Used to be Square, then Block. Now the ticker's XYZ. We've got 2 leaps, and my it's been hit, but yeah, huge. So I'm just going to stay long. All right, guys, that's a wrap. Be sure and leave a comment down below. Let me know what you're doing this week, whether you're 50% in the market, 70%, 80%, all in, which I don't recommend. However, I think it's a huge opportunity going forward. Remember to hit like and subscribe. Download the free options workshop. Thanks for watching. I'll see you in the next video.